The Kuwaiti stock market, in the meantime, has eased off its 2017 high after a world-beating rally since the start of the year. It's been an ongoing story. Let's get some more perspective on this. Our next guest has a big call on the country. Let's welcome Ali Adou, Senior VP for Asset Management at the National Investor. Thanks for coming on the program.
Thank you.
Again, just to put some context in all of this, this is the chart that tells the story. 5440. Our clients can pull it up on the Bloomberg. You've got the top panel, which shows, I mean, take a look at that right there. That's the rally in a matter of less than 60 days, right? Double digit. And at the bottom, you can see the capital inflows. Those are the volumes in the bottom panel right there. Now, tell me why anybody in their sane mind should be putting money to work in a market where more than half the stock have an RSI above 70.
Well, the thing is, you have the macroeconomic story in Kuwait is actually compared to emerging market, even frontier or even GC is better, has a better picture. From a macroeconomic perspective, and a budget deficit, it has like Kuwait has expected budget deficit this year is around 10%. In addition, it has the lowest break-even oil prices from a budget perspective at $53. So this is giving a boost for the country. In addition, for the past 4 years, the central bank has been very conservative with the banks. So they have been pushing banks to add extra general provisions, which has been affecting in a way or another the profitability of the banks. And many investors haven't looked at Kuwait. But the sudden surge in volumes is actually the big question, which I think mainly is, first of all, the expectation in the frontier market index, which is going to, we're expecting Kuwait to surge in weight.
Speaking of MSCI, just to cross over to what is really the engine of this part of the world, the Kingdom of Saudi Arabia, the biggest stock market. This EA function, amazing. Earnings analysis, again, we have 166 out of 168 companies that have reported. And you'll notice the many shades of red here. For the most part, the sales surprise and earnings surprise have been to the downside in the fourth quarter. What's your take on the numbers and how the quarter has passed?
I think the results in Saudi were a bit below expectations overall. And I guess the fact that valuations, we've seen a huge rally in the last quarter in Saudi. So this has increased the valuations compared to emerging markets to 15 times. And I think we're a bit on an expensive side at this point in time. But I think the opportunity in Saudi is around May, because if MSCI decided to upgrade Saudi to the emerging market status, well, we're going to see huge inflows, and it's going to be based on our expectations, one of the biggest upgrades, the past decade in the emerging market space.
Right, Ali, just before I get to my question, we do have breaking news out of Japan. Mitsubishi Heavy right now losing around about 5%. We did get their earnings results, third quarter operating profit at 30.1 billion yen. Their net at 7.7 billion. They're falling as much as 4.9% after those earnings were out. So that's the latest we have from Japan. And Ali, let me continue with you on the conversation about Gulf stocks. Because you were mentioning, we're talking about Saudi Arabia. It's not just in Saudi Arabia, but we're seeing this infrastructure spending just continue in the region. Does that mean that that sector, the construction, the contractors, are expected to gain?
Well, the thing is, contractors have been facing huge problems in the past, especially in Saudi and UAE, because we have seen some slowdown in payments towards them. The infrastructure projects that you're talking about are still there. You have in Saudi, you have big infrastructure, mainly on the big projects such as the metro and the airports. In Kuwait, since last year, the government has been very proactive, and the fact that we've seen big surge in infrastructure project in Kuwait, that has been a driver in the market, especially from loan growth perspective in the banks. In the UAE, I mean, the government has always been spending, especially in Dubai, on the focus is on tourism, and many of the projects that are being delivered or being worked upon in Dubai are towards that side.
Right, the UAE was the best performing market in the Gulf last year. You mentioned tourism, but also we're seeing hospitality, trade, finance, just continuing to grow. So what are the sectors that you like there?
Definitely. I mean, from a stock market perspective, the fact that the market currently is mainly divided into the biggest components are banking sector, real estate, and you have other smaller components. But at this point in time, I believe real estate is poised to be the next gainer, and then towards the end of 2017. In addition, the banking sector, I guess, this year should be some kind of consolidation phase.
I mean, just to pick up on that, that's key, because the numbers we got, clearly the market not convinced, right? Even though some of them met estimates, but the market is seeing weakness. The statements we got from these companies even pointing out that the deceleration in economic activity off the back of lower oil prices is having an effect. Where's this going to go with the bank story?
I guess next year we should see the banks, or 2017, we should see mid-single-digit loan growth, which from our perspective is normal. Banks have been facing some problems in the cost of risk and provisioning due to the fact of the exposure of the small and medium enterprises last year. So the banks, in addition, you have mergers and the mergers that are happening in Abu Dhabi. So this year, we believe that this year is more of a consolidation phase. Banks are cleaning up. Even Q4, especially in Abu Dhabi, we haven't seen loan growth. I mean,
what we have seen are a lot of impairments.
Exactly.
Ali, a pleasure having you on the program. That's Ali Adou, the National Investor. He's a Senior Vice President there for Asset Management. All right.